Is the British pound GBP USD about to give us a 300 pip opportunity? And if so, what are some key levels to keep in mind? That's what we're talking about in today's video. I'll show you the key levels I'm watching and my targets. We're also going to look at the EURUSD and how that could help us in identifying what's happening here with the pound. And finally, I'll give you an update on the DXY as it breaks above 103.50. All right, so let's go ahead and jump right in here looking at the GBP USD daily time frame. So obviously this market has been very sideways ever since back here in late November actually, when it broke above this area around 125.50. So you can see we're right back here. This was a pivot for the pound. And sure enough, when we got the breakout up here, we got the retest down here at support, and then the retest of these highs up around 128. Now, since that time though, since this period back here, the pound has been incredibly sideways and really difficult to trade. However, a few things are happening so far this week that I want to talk to you about today. And the first one is occurring right here on the GBP chart. So even though the market is still very sideways, right now we do have this series of higher highs back here. Okay, now since that time though, we do have lower highs that have developed. So this right here is starting to look like a rounded top. Okay, so this is not the first time that the pound has done this either. If we go back here, and I'm sure it's done it, more recently, like you can even see through here as well, right? A little bit of a rounded top. However, this one back here in 2021 is also very prominent. So this is incredibly well defined as well back here in May, June 2021. So back here, you can see where, once again, we had the market just kind of moving sideways. However, what we got here was GBP making these higher highs, okay, into resistance. Okay, then we got a series of lower highs into support. So that's kind of similar to what we're seeing right now with the pound and the price action since November, December. Okay, so I think that, right now there is reason to believe that the market has topped out. Now, what is it going to take to push the market lower? And by the way, if you want more videos like this one every single day, be sure to subscribe to the channel, click the bell icon for notifications. Also, don't forget to smash the like button to show your support. All right, so what is it going to take for this market to break down and where might it target? So first of all, we have this support off of these lows down here right around 126.12. So this is going to be the first support area for the pound on the way down. And the key area that the market has to get below in order to confirm this as a rounded top is going to be down here around 125.50. Now the reason for that is that this over here is still part of this rounded top. And the lows here, okay, the daily closing price was 125.50. Okay, so really, you could say that this entire area down here is going to be support for GBP. So there is that chance that if we see the market come down here, maybe wick below, there's a chance that we get one more push up before the market finally starts to break down, right? In this series of lower highs. Okay, now what would negate this? And then we'll talk about targets if we do get the breakdown. Now, what would negate this, clearly is a move above 128. So if we were to get the pound moving up here above this area on a daily closing basis, okay, a sustained break above here, something like this, right, that would negate this as a bearish idea. Now, it does seem a bit unlikely, given the current price action that we're seeing here for the pound, but it could still happen. Now, looking at this pattern, okay, the way that you come up with the objective for something like this, and there's a couple different ways. You could use the low down here, you could use the lows up here in this area, but if you use this low from back here in December, right, and measure toward the highs, what you're going to notice is that you get about 270 pips. Now, if you measure lower, okay, the objective is all the way down here. Now, obviously from current levels, that's more than 300 pips. So the 300 pips that I'm referring to in today's blog post and video is actually the more conservative one using this low down here. So if you use these lows up here toward the high, you get about 220 pips. Measure lower, you can see where this key level comes in right there at 220 pips. Okay, so I do think that if we see the pound break below this area here, again, we could see a little bit of a bounce here, maybe some more consolidation. But if we do see the market get below here, okay, sustained break below this area flips to resistance, and this area right down here around 124 would be the target. All right, now I do think that from there, we could see this continue to unravel. However, I would also expect some consolidation to occur between 124 and this 125.50 area if we do see the market break down in the coming days. Now, a second reason why I think that we could get a breakdown here, despite the fact that the pound is still sideways, is the euro. Okay, so we talked about this one a couple of times, most recently in that weekly forecast. And the thing to note here is, I've been bearish on the euro ever since this close right here on January 2nd. So we talked about this, how this confirmed the fake out above 110. And you can also see where we got the retest up here in this area, although not quite at that 110 level. All right, now I just talked about this one yesterday, talking about would we get the retest up here or not. And hopefully nobody took that as me being bullish on the euro, because I have been long the dollar, long the US dollar for weeks now. Okay, so, right now with the euro breaking down below this trend line from back here in October, it does look like we are going to get that confirmed breakdown. Okay, now obviously the day has to close here because there are still 5 hours left in today's session. So the euro could close, back up here for all we know. But if we do get a sustained break below this region up here, that flips to resistance. And in my opinion, we're looking at a run down here toward this 107.55 area. Now, you may be thinking, okay, well, what does this have to do with the pound? These are separate currencies, and yes, they are. However, if you take a look at the two on the daily time frame, compare the two, this right here, okay, in blue is the euro and orange is the pound. So what you can see is that, for months, and you can go back as long as you want to go, the two tend to move with each other. Okay, yes, there are little deviations along the way, but the point here is that if we're looking at the euro breaking down from a very clear area, then this right here could pull the pound lower. Okay, so the euro breaking lower, again, not confirmed yet, but if it does give us that confirmed breakdown, this right here could pull GBP lower even though it's still sideways. All right, now another critical component here for GBP is going to be the DXY, the US dollar index. And by the way, guys, we've talked about all of this at length in the VIP group for weeks now. So if you do want to join us, see the link at the top of this video for 70% off lifetime access for daily videos, the course that launches this month, and also exclusive charts and setups. Plus, you'll get to see my trades in real time, like the one I made on the dollar CAD so far this year that's up considerably since I entered. All right, so looking at the DXY, the US dollar index, we have talked about this one ever since it reclaimed 101.90 back here. So you can see that 101.90 was a critical factor for the DXY, and it opened this year with a reclaim above 101.90. We saw the retest here on that NFP Friday, and really the DXY told you what levels to watch, because notice on this NFP Friday, we got a retest down here at 101.90. We also got a retest up here at 103.10. Look where the DXY is bouncing so far today, so far this week. All right, now these are all levels I've talked about in the previous weeks. I haven't touched a single level. And what you can see here is that the DXY is now breaking above 103.50. Now, again, this is not confirmed. Okay, this is unconfirmed as of now because we need to see a sustained break on the daily chart, and really even preferably weekly chart above 103.50, just because this is such a critical level going back to 2016. But if we see the DXY base above this area, okay, a sustained break above here, then we're looking at a move up here toward 104.20. Now, like I've said in recent weeks, this is going to be critical for the DXY, and this is going to matter if you're trading GBP USD. So if we see a sustained break above 103.50, this area flips to support. 104.20 is then resistance. Okay, so easy enough. However, these highs back here, if the DXY takes these out over the coming days and weeks, that is going to be a significant move for the US dollar that could impact the rest of this year, or at a minimum the next few months. And the reason I say that is, if you'll notice here, ever since these highs back here in October, we've had a series of lower highs, okay, lower highs and lower lows. Now, if we see the DXY break above this area up here over the coming days, then that would completely flip the structure that we've seen ever since October. So it would flip the momentum here from bearish to bullish. Now, that right there, in my opinion, would likely start to target areas like 106 and 107. Okay, but short term, 103.50 is going to be the level to watch. If we get a sustained break above that, that flips to support, and we're looking at 104.20. All right, so this moves inversely to the euro and the pound. So if you are trading GBP USD or the euro, the DXY is going to be one to watch. All right, so let's go ahead and wrap up here. And once again, if you are enjoying this, be sure to like the video and also subscribe to the channel for daily Forex videos. Okay, so really for the pound, what this comes down to, as long as we're seeing the market trade below 128 and make these lower highs into this support area, I like the idea of a breakdown here. However, this region down here is going to be key support for GBP. So I wouldn't expect to see some type of bounce from this area in the coming days if we do see it tested. However, a sustained break below this would flip this region up here to resistance. And we're looking at areas like this region down here around 124. Okay, so invalidation above 128, get below this support area between 125.50 and 126.12. And I think we see a move down toward 124. All right, if you want daily videos, guys, be sure to subscribe to the channel and click the bell icon for notifications. And don't forget to claim your 70% off lifetime access. See the link in the description of this video. If you want an alternate method to join VIP, join my Forex broker using the link right here on the screen. Deposit $500 or more. Let me know, and I'll invite you to VIP with lifetime access. Trade well this week, and I will talk to you again tomorrow.